Good morning, traders. Welcome to StockCast. My name is Todd Derby, along with guest host James Mason. Good morning, James. How you doing?
Todd, good morning. I'm doing well. How are you?
Doing well. Glad to see you get your whatever happened. Glad to see you're back.
It's like I was just mentioned to you pre-market. Like, I don't know if YouTube is doing something to finance channels or whatever. If y'all remember, like a few years ago when YouTube went after the crypto channels, like those channels started acting funky before they ended up getting purged. And well, when they got purged, then that was a wrap. But oh well, if it is what it is, then I really don't care. All right.
We have a backup plan if they do that, so we're good.
Exactly. Yeah. So, hey, Todd, we'll have to come up with a backup plan later, okay?
We talked about backup plan already.
All right. All right.
Make you a regular guest.
All right. So Dow futures are currently down 173 points. S&P 500 is down 12 points. We do have this slight pullback in the market. A lot of it is really just jitters. Really, the media, they keep trying to toot the horn about an incoming recession. The thing is, like, the recession is just not going to happen like tomorrow. It's not like we're going to wake up tomorrow and be like, oh, the recession is here, guys. I mean, we could have full-blown stock crash because you don't ever know what could happen in the market. But what I'm saying is, like, well, let me back up a second. Just keep in mind that, the stock market is two different entities when talking about or when compared to the economy. Just keep that in mind. So while recessions obviously influence the economy, that deals with the economy. It does obviously have an effect on the stock market, but they're two different entities. Just remember that, guys. But anyways, the media keeps just hammering about a recession, and I don't know. I mean, yeah, Todd, we know a recession is freaking coming. But really that's not like our big concern right now. But like, it's kind of like what we said pre-market. Like, they released numbers this morning, and U.S. retail sales for the week ending in July 9th is up 13% year over year.
That's a good number.
That is.
I mean, that's not a number that's going to reflective of a recession coming.
No, it's really not. It's really not.
And back to your recession comment. I mean, people don't look at the stock market to see if there's a recession. They look at their 401ks, and their 401ks are down 25%. So many people already think that we're already heavy into a recession, or we've already been there. So,
well, I hope they like surprises. But man, hey, who knows? Like, man, we could go on another freaking rally that could last another year, 2 years.
We won't with the current president. My opinion is that with the current president and the current situation our government's in right now, I don't think a strong rally is in the near future. The midterm elections could change that. I think if there's a strong swing in the midterm elections, I think you could see a potential rally. But I don't think we're going to see a strong rally until we have a new president.
We shall see. As for a new president or any president, who knows who the next president will be, because the talk is that they ain't wanting to run Biden.
That is true. That is true. And when I say a new president, we could get one new before his term is over also.
True. Hopefully that's not the case. Hopefully that is.
Yeah, I mean, outside of, he's old enough that he could be in his final days.
That's
but
exactly what those. Todd, thank you. Those are key words to say before the Secret Service knocks on your door.
Good. They can see that on my wall. I got no master plan set up, but he may just step aside. He may say, you know what, I want to step aside because health issues, and that could change everything, especially going into a presidential election cycle.
Yeah. All right. So Brian Latchford, thank you for the tip. See, this is to start the cool trading stuff fun. That's what we should call it fun, the cool trading stuff fun.
I like that.
Jordan Garcia, thank you for the tip. Kathy says we've been in a recession for months. Nah, Kathy, your fund just sucks.
I don't know.
You know what? I can't bash her because I mean she is a fund manager and she's worth a ton of money. So I can't bash her, but
yeah.
How
much do you think she's worth?
At one point, I know she was worth over 100 million. But the reason why I say I can't bash her is obviously because of her background. She has earned it and built herself up to that. So obviously, I'm not on that kind of level with her. But in terms of like trading, man, when I would look at her portfolio and I'd see the shit she's holding in that fund, I'm like, damn, why are you holding that shit? Like it done ran. I mean, you got more out of it than really what was to be expected. And I don't know. Whatever. I mean, it's not for me to try to pick to armchair quarterback and pick apart her fund. I mean, anybody could do that. Anybody could obviously do that. And they do that to me, especially about predictive oncology, which, I have my own beliefs about. And that's the beauty of trading in the stock market. You make your own damn decisions. So, and you have to live with them. But yeah, so other than that, kind of jumping back on track here, U.S. retail sales were up 13% year over year. I mean, that's pretty strong buying right there. Which inflation does help that. The beginning part of inflation. Now it's to the point where the cost of goods are so expensive that, I mean, I highly doubt that next year's will be a positive number. But I could be wrong. Very well, could be wrong.
It'll be tough. It'll be tough to beat 13%.
Yeah. And besides, come next year, you guys won't even remember this conversation I had. So if I'm wrong, then you won't remember. Other than that, CPI numbers coming out 8:30 a.m. tomorrow morning, Eastern Standard Time. That's going to be the interesting one. That's going to be the one where the Wall Street algo hits us pre-market at 8:30, and it's probably going to whip it hard in either direction. So be sure that you have a plan for how you're going to handle that with your current trades before the day is up. Meaning, if you're trading options, be sure that by the time that bell rings, that you are okay with living with adverse outcomes just in case. And I'm saying this because we're at a critical moment, and I'll show you the spot chart. Hold on. All right, so here we are. This is the daily chart on SPY, and we can see how yesterday turned out. It's a little red, to be expected after that nice push up in the market. We did get above that middle Bollinger Band line, and we did have that non-EMA cross over that middle Bollinger Band line. But if we still looked at, I mean, we're still in a downtrend. I mean, we can see that plain as day with that middle Bollinger Band line still pointing downward. Now, obviously, we do need, in order for that middle line to, invert and go up, we do need obviously the stock to push up. So, I mean, could this be the bottom? Potentially. I mean, the Wells bottomed it out right here, and we followed that all the way up. But I mean, could they be trying to push it up more? Hey, who knows? To be honest, and that's why we're in such this like critical little phase, and that's what I'm really kind of like watching here. If we get a nice bullish push today, I might take a strong day trade, but I might cut everything before the market closes, just in case. And a lot of it will really depend on, how my wells are trading, what they're holding, for me to feel confident. But I'll cross that bridge when I get to it. But I mean, just based off of a technical analysis perspective, I mean, we're still in this downtrend overall in the market. And tomorrow's numbers could really gap this thing down if they're too high, or if it's something that we didn't expect. That's the thing. If it's something that the market didn't expect, and when I say didn't expect, basically if they decide that, okay, it's time for it to go down, because they already know what's coming before it happens. And really the market trades however they decide it's going to trade. So this is the critical little point right here on the daily chart with SPY. And it's all going to be, this next little step in the market, it's all going to be dependent on these CPI numbers for inflation tomorrow morning at 8:30 a.m. So with that being said, guys, again, you need to have a plan in place. If you're trading small accounts, I mean, I can't tell you what to do, but if you're trading a small account, by the time they release those numbers, you will not be in a position to where you can close out that trade if you're trading options. You're gonna have another hour of whatever's happening in the market before you can sell off, if it's bad, or if it's against however you're trading. Just keep that in mind. So anything can happen. I mean, and with CPI numbers, like if you take that hit, like a lot of people try to think with options, you take that big hit, especially off of something like CPI numbers. We already have implied volatility. So that's another factor. So you might take that hit and have your trade gap against you. But then if you have implied volatility on top of all that, like if, for your contracts, when that implied volatility, the IV drops, that's just that IV crush. And that's just going to hurt that much more. So again, I cannot stress this enough. Have a plan in place before the day is over. And it's okay if you have to just like go through a macro event or economic event, whatever event it may be, that you're fortunate enough to know about in advance, to not trade through it. Like, I cannot stress that enough. You don't have to trade through something that is coming up.
Especially if you're green. Especially if you're green, you can take the small win and watch it, and you'll learn from it, if nothing more.
Yeah. But I say this because, like, I know there are going to be people who will be up, 50, 100%, whatever it may be on an options trade, and they're going to be like, man, I want more. I'm going to swing it through this, and those contracts might be worthless tomorrow. I mean, we've all had it happen. If you traded long enough, trade options long enough, you've had it happen. Like,
you've been warned. You've been warned.
So, yeah, that's what I'm concerned about overall in the market, and I'm just watching. As for individual tickers, anything on an individual level is not really my priority right now. It's just overall market stuff. So where the overall market is going to go is literally going to dictate how I trade in the future. So, Todd, that's all I have to say. Do you have anything else?
Just two things I was going to comment on. One is that we're heading into earnings season. I think earnings is going to be interesting this summertime.
Thursday, big banks.
Yeah, so it's watching the earnings numbers is on my radar, and then I'm starting to see reports of COVID again, and I thought we were moving away from the whole COVID thing, and so I'm curious how the media and the government are going to play the COVID cards over the next 4 or 5 months.
Whenever you need a scapegoat, you can always use something like that going on to
very true.
Let it be it. And that's how the media works. They'll use COVID, and then they'll use this doomsday recession like it's about ready to happen in the next hour after lunch or some shit. And you need to watch out. That's how they act. That's how they write their articles, at least.
Yeah.
And then if you look the next day, they'll have another article written by the same person that contradicts that one. So it's all sensationalism. That's all it is. So whatever it takes for them to get those clicks or views, that's how it works. That's how the game works, guys. So
that's Jen's asking me a question I talked about yesterday. PLRX. I traded it one time. I traded it one time in the pre-market, which I shared with you guys, and then after the open, I hit it one time. It had a spike. It took a small short position, and it dropped 80 cents, and I sold immediately. And I was really fortunate that I did that because it bounced and hit as high as $24 yesterday. I know a lot of people, if you look in the Twitter world, a lot of people got crushed on shorting that, and then they offered a offering late in the day that didn't really drop the price a whole lot. So I think this even might have potential for a squeeze today, but it hasn't traded a lot compared to yesterday. It's only traded 500,000 shares this morning, so I'm watching it, but I don't think I'll be trading it.
All right, everybody. So that is all today for the show. We appreciate y'all tuning in. And again, remember, be sure to have that plan in place before the day is over, because if you're trading options, once you're locked in, when that bell rings, you are locked in, son. So other than that, we will catch y'all in the next one.